Representative Franklin.
Thank you, Chairman Hill, and I really appreciate your calling the subcommittee hearing to hear House Bill 430. I'm very excited that we have an opportunity to actually do something in this state with this piece of legislation that will enable us to actually adhere to our oath of office to support the United States Constitution. As you know, we took an oath before God to uphold the Constitution on our first day when we took office in January. And I'm sure most of y'all did what I do every time we take that oath, and that's actually read it so I know what I'm taking the oath to. I'm sure you do the same. And in there we find in Article 1, Section 10, among some of the other restrictions on the state, says that no state shall make anything but gold and silver coin a tender in payment of debts. Now that clause has never been amended out of the Constitution. We are mandated as a state to use nothing but gold and silver coin as a tender in payment of debts. So the question before us really is, what is the best way for us to discharge that obligation that we voluntarily entered into when we ratified this Constitution in 1788? And that's what House Bill 430 attempts to do. It recognizes our duty in Article 1, Section 10 of the Constitution, and that's what you see in this first section down there on lines 16 to 21. We're recognizing that this is a constitutional obligation that we have. Unfortunately, the federal government went off any type of metal standard on their paper currency. And that left all the states in violation of the Constitution because now we did not have gold or silver coin available to us. Thankfully, in the mid-1980s, Congress saw fit to pass a law that created silver, gold, and silver eagle coins that are legal tender. So what we're calling for with this bill is the use of U.S. minted legal tender gold and silver coins, which is what the Constitution requires, that we use nothing but gold or silver coin as a tender in payment of debt. Now, I've got a kind of procedure in here which might have which probably definitely does have some room for improvement. And what's the best way to go about that? Figured that, well, if you deposit an ounce of gold, then you ought to be able to withdraw an ounce of gold. And it always says that ounce of gold. It'd be pretty inconvenient to carry that ounce of gold around with you, particularly if you had a lot of ounces of gold to carry around with you, or ounces of silver. So there's a mechanism in here where state depositories, as well as state chartered banks, would offer accounts denominated in gold, denominated in silver, so that you could write checks on them, initiate electronic transfers of a set weight in gold or silver, and that way you're not cumbered with having to carry it around with you. You just use it electronically or by check. And that's basically the bill. It's trying to get us back to obey the law, obey the Constitution. Passed out some frequently asked questions about the bill that people have asked up to now, and hope you'll take a chance to look at that and see, because the real question before us, I know Chairman Hill, you'd mentioned, well, in the sign-up sheet there would be a list for those speaking for the bill and those speaking against it. I think the real question before us is not whether you are for gold, using gold or silver coin as tender in payment of debt, but what is the best way that we discharge that duty? So hopefully the questions will be, or the commenters will be addressed, well, I'm against the implementation as stated in the bill. This is the suggestion that we could better implement this constitutional mandate. Hopefully those that signed up on the against sheet will be addressing If they don't like the solution proposed in adhering to our constitutional duty to use nothing but gold or silver coin in tender of payment of debt, that they will actually bring forth their own recommendation in how we can use nothing but gold or silver coin in tender of payment of debt if they don't like the solution that I brought forth. And I'll be glad to take any questions.
Okay, thank you very much, and we do have a couple of questions right away. Representative Mayo.
Thank you, Mr. Chair. Representative Franklin, considering our federal government is pumping billions and maybe even trillions of dollars into the economy right now in the form of national debt, and I'm thinking about the conversation Chairman Ben Bernanke had on 60 Minutes a couple of weeks ago, where he talked about pressing a proverbial button that would inject all of this liquidity, all this money, this debt into our system. And my question to you is, would we be fighting a tidal wave of federal debt if in Georgia one state tried to change directions and tie our policy to a gold standard when the federal government is doing the opposite?
Well, I really appreciate that question, because it really, that kind of gets to a secondary motive in bringing this bill forward. That as apparently our federal leaders, not just this administration, but the prior administration that brought this, that really started expanding the money supply, trying to get us as close to get the U.S. dollar in as close parity with the Zimbabwean dollar as they can, as rapidly as they can, is about what it looks like they're trying to do. House Bill 430, when we enact it next year, will actually protect Georgians' wealth, so that their dollar will not be losing the purchasing power that the dollar of every other American would be losing due to that inflated money supply. And I do appreciate the question.
Okay, thank you very much, Representative Moran.
Yes, good morning. Representative Franklin. And I'm reading that it will be minted by the United States. And let me go to the gold and the silver. Do the United States produce enough gold, or who is the largest producer of gold throughout the world?
Well, I don't know who the largest producer is, but the act that called for the minting of 1 ounce gold and 1 ounce silver eagles, and I think those are, at least the gold ones go as far down as 1/10 of an ounce. That act called for the U.S. Mint to mint in sufficient quantity to meet demand. So they are charged by federal law to mint sufficient quantities to meet demand.
But follow-up question, but that gold will come from U.S. territory, or it will have to come from abroad? And I'd like to know if it's possible how much we produce, because
It would be wherever the U.S. Mint gets the best deal.
I know, for example, India has a very large gold production, and some other countries around the world. And I was just wondering who was really the largest producer, or are we going to be doing it here in the United States, and then we're going to have to export? Just a question.
Well, I appreciate that. I know the bill doesn't address that. It just, wherever the U.S. Mint gets their metal, it's not the issue of the bill. The bill is that we will use those U.S. minted gold and silver coins.
Well, but I think it's very important that if we, as you say, if something this is enacted, that the supply will be met, because we're talking about billions and billions of dollars and in metal, as you stated. And I was just wondering how, where we're going to get the metal from.
Well, we would be getting it from the U.S. Mint and from taxpayers paying their taxes to us. We'd be getting it to pay eventually, after probably just a few short years. It would all be circulating within the state, where no one would have to go outside to get it, because it would be circulating in the open economy.
Thank you.
Thank you very much, Representative Greene. Representative Weldon. Okay.
I'll wait that.
Next is Representative Cox.
Thank you, Mr. Chairman. Representative Franklin, your effective date is obviously incorrect at this point, but just say the effective date is January 1st, 2011. At that point, what do you envision as a transition period? Because effectively, January 1st, 2011 occurs, April 15th, 2011 occurs, folks owing money in taxes at that point to the state, I'm assuming would have to remit those taxes in gold or silver coin.
Absolutely.
And then as we are contemplating in the session of 2011, our $20 billion or so budget, I mean, do we effectively have to have in the vaults of the state $20 billion worth of gold and silver coin to make payroll?
I don't think we keep that much on hand at any given time for the current budget. I don't think we budget the exact amount on deposit. It comes in and it goes right back out. So I don't think that it would require us to have that much on hand, but it would be convert whatever we have on deposit to gold or silver to pay out. And then thereafter, payments coming in from withheld taxes, say, or fees, or whatever, would be paid based on the current market value at the time that it's paid. Very easily, like April 15th comes along, or say you pay your, today's the March 25th, whatever the most recent date is that you write that check to the state, that's what you convert that dollar amount that you owe to that much in gold and silver, and that's what you write your check on.
Thank you very much, Representative Peake.
Thank you, Mr. Chairman. Representative Frank, just want to clarify how this practically works, and this is just payments from the state to the state, or you envision this would apply to commerce as well too?
Well, this in no way limits commerce. That if you want to accept only Federal Reserve notes at Cheddar's, then that is definitely up to you as a business owner. This would in no way limit what you can do as a business owner.
Well, that's what I'm trying to figure out. Yes, would I be running a 1 ounce special for fish and chips at Captain D's and Cheddar's instead of a 4.99 special or 1 ounce gold special?
I like that. I like that.
And would I be moving toward actually collect? No, you talked about that you could do it electronically if you had X amount of gold or silver in your bank.
I envision that our banks would be more than willing to offer debit cards, credit cards denominated in gold and silver, because they would see an awful lot of commerce and business activity going on in Georgia, because they know that our dollar is not heading in the direction of Zimbabwe's.
It's not a flippant question. I hope I don't take that way. I'm really just trying to figure out how would you actually work it into the commerce. It just seems like it would be difficult to do that. Obviously, there would be some transition.
Well, I have never been to Tijuana, but people that I know who have said you go into any store and you see the price for this article in pesos and in dollars. You choose. You can pay me in pesos, you can pay me in dollars. Well, I would envision that a merchant would say this much in Federal Reserve notes, this much in silver, this much in gold, that you might have several prices, and people get to determine in an open, free market what the transaction is going to be. But this in no way dictates to a private industry what they will, how to operate their business. I don't believe that we as a state have that authority, but we do have the authority to determine, well, not even the authority, we have the obligation that payments to and from us must be nothing but gold or silver.
And that's what this bill is.
And that's the only thing this bill addresses is payments to and from the state.
Thank you very much. Representative Parrish.
Representative Franklin, let me ask you a question. If the state is engaged in economic development, trying to create jobs all across the state. And then our communities across the state have their own efforts to recruit companies to come into the state to create jobs and this sort of thing. Would you speak to how you think, if we were to adopt your proposal, what would this do to the efforts of the state as well as the communities within the state to recruit companies from across this country as well as worldwide to come to Georgia to build factories and create jobs and this sort of thing?
I appreciate the question to the former chairman of this committee, and great respect for you, sir. And I believe that it would actually, that this bill will increase economic development, because those businesses looking to expand, looking to locate, will see, if I invest in Georgia, I know that every dollar I invest in the great state of Georgia is not going the way of Zimbabwe, which is our current economic trend right now, that at least from the last decade that we've seen, with the just creating money out of nothing, as Representative Mayo pointed out. So I believe that the businesses will look at Georgia and say, there will be economic stability in Georgia, and the dollar will still be worth something there, because what will be on deposit is gold or silver, no matter what the price goes to. If gold goes from $900 an ounce to $9,000 an ounce, it's still that ounce of gold that's on deposit, and they haven't lost any value. So I believe that the businesses would see this as a place to locate, and we're going to start seeing a lot of economic activity because of this bill.
Thank you very much. Representative Knight.
Going back to the prior conversation about the conversion, for the average taxpayer that's out there, they get to the end of the year and it's April 15th. How, to get into the details of where you would go and find gold to tender back to the state for your tax liability. And I'm not talking a little of it. I mean, we've got businesses, we've got companies, individuals that work hard and, turn profits and, currently legally obligated to tax it. Where would they go and find that gold to remit to the state? What would be the conversion process?
Well, where they would find it, they could, I perceive that the financial institutions, the state chartered banks and the state depositories would be keeping a bit of it on deposit, or on, that they would have quite a bit of their own funds to encourage people to move accounts to their financial institutions, because they're offering that service. They could get them, I don't know the process of getting them from the mint, gold and silver dealers, where people are getting it now that have it. But as far that would be one way that they would get it. I know the bill calls for what the market value is, what price in the market it converts to twice a day on the London Exchange. So I don't know if that answers that question.
I'm just trying to envision that. Even from our state chartered banks, I have in the past been an auditor, as a CPA, and gone in and audited some of our state chartered banks or local financial institutions. And that's been a long time ago, I say long, decade. I don't remember any bank holding gold. And I've counted a lot of money in the vaults through the audit process.
We went off the gold several decades ago.
Yeah. So I'm wondering, how would, again, the conversion process, where would they go to get that? And I'm asking a very legitimate, not a sort of sarcastic question, but a very legitimate question. Where would they go?
Now, I know a bank has every right to go to the mint to get gold, to get these gold eagle coins, to get the silver eagle coins. Since those are legal tender coins produced by the U.S. Mint. They would be able to get those. And as well as a citizen to be able to go to a coin dealer, a gold dealer, a silver dealer, to purchase what, to exchange. Purchase is not the right word, exchange, because gold and silver are money. So it would be an exchange of their paper to metal, and just be a conversion.
Two follow-up questions to that.
Yes, sir.
Very seriously, I'm just thinking through the process. One is, do you know what you say the Mint, the legislature very unfamiliar with the federal Mint, how much is on hand? And then in your scenario, going out to the gold and silver dealers, why would they want to get rid of when everybody else is trying to get? In other words, if I were holding gold at that point, why would I want to exchange it for something that I would have to turn around and go look for, more gold to pay my obligations, to pay my.
Well, you'd have to ask, why are they exchanging constantly and have for, for years on end, doing the same thing, changing, buying. Someone says, well, I think that the metal market stopped out. I'd like to cash in or trade my gold for Federal Reserve notes. Someone else thinks, I think that gold is still going up. I want to trade my Federal Reserve notes for gold. It's what everyone does in the stock market today. Some people think that it's going to go up. Some people think it's going to go down, and they buy and sell accordingly. So I don't see where that would be a factor, but I do appreciate the question.
Thank you very much. Representative Cox.
Thank you, Mr. Chairman. Representative Franklin, I know it's going to sound bizarre, but aren't there other portions of the Constitution that we choose to ignore as well? I mean, the 10th Amendment, for example, talks, you and I have had those discussions about, all powers not enumerated in the Constitution of the feds belong to the states, and yet the federal government's in the retirement business, the education business, the mortgage business, the healthcare business. They use the Commerce Clause or the Supremacy Clause as their excuse to violate the Constitution. What clause have we been using as our excuse to violate this particular portion of the Constitution?
I appreciate that question, because I have not heard any justifiable, any attempt to justify ignoring this provision of the Constitution. This isn't, I do think this is a little different than the 10th Amendment, which clarifies that the federal government only has those limited delegated powers, which that is obviously the case. But then they're using a clause saying, well, because of this clause, I'm going to do so-and-so that's not enumerated. In this Article 1, Section 10 provision, limiting the states to not coin money, to not issue letters of marque and reprisal, not use anything but gold, silver, coin as tender in payment of debt. I have not heard any explanation from any state justifying not obeying that portion of the Constitution. And I think that's why it is incumbent upon us that we do obey the Constitution. We took that oath before Almighty God to do so.
Okay, thank you very much, Representative Cox. We have Representative Neal. Representative, how would this affect our ability, states and counties, municipalities, to issue bonds? Will we no longer be able to issue bonds?
We'd still be able to issue bonds, but we would then be, the amount of money coming in would be in gold and silver to us, and the payments would be in gold or silver going back out. So it would, the whole bond process, we're holding your money over time. We issue a $20 million bond for a 5-year roof on a school like we usually do. We will, the $20 million comes in gold or silver, because then we've got to pay it out to that roofer. And then we pay back that $20 million plus interest
So
in
would
gold
we-
or silver coins. So
would-
nothing changes.
Would we need that 20 million on deposit? Because a lot of business we do as a government, I think we're looking at forward revenues, and we may, as Representative Cox mentioned, you know, what happens with the money.
Right, but as a state, we don't create money out of nothing. So we've always have to have money coming in to pay that indebtedness. When we issue that $20 million bond, it's not because we have $20 million now, or we don't think we're going to have the $20 million during the fiscal year to pay out for that, which is why you see you saw a lot more bonds in the budget that we passed out last week because of, we don't have current money, so we're just going to bond it. And so we're going to borrow our way to prosperity. Well, this bill doesn't change that, because however, the money coming in, the money going out, rather than being Federal Reserve notes, will be gold or silver. So the inflow of money and the outflow of money stays the same. It's just, what is it? It's not paper, it's gold or silver.
Isn't there a limited supply of gold, and wouldn't the value of gold soar because of?
Well, that's the beauty. If the value does soar, because in relation to a Federal Reserve note, as we try to achieve parity with Zimbabwe's dollar, then we will, then those who have gold or silver on deposit actually have their purchasing power preserved. If you've got $1,000 in a savings account, that now next year might just buy a stick of gum. But if you've got 1 ounce of gold on deposit, that then becomes worth $10,000, $900 today, say $9,000 this time next year, you still have that 1 ounce of gold that has the purchasing power of $9,000. So in that inflationary scenario that you brought out. So it actually does help our Georgians, which is, I believe, a duty that we have as legislators to try to protect the people of this great state from the financial policies coming out of Washington. And that came out of Washington under the prior administration.
Thank you very much, Representative Greene.
Yes, thank you, Mr. Chairman. Representative Franklin, and going back to your statement about the dollar and the peso in Tijuana, and I think that happens all over the world, that you have the option of either the dollar or the euro, because they can, if you get the dollar or the euro, they can sell that in the black market, in the underground market, for a better value than what they get. But my question is, there's any other places that does this? Any other country that deals only with metals, so we can see that maybe their successes and their failures, and do we know about any other country or any other place that, again?
I'm not aware of any, but perhaps some testifying might have some knowledge of that, but I personally don't. I'd love to learn something.
Thank you. Okay, thank you very much. And Representative Franklin, I think that concludes the questions the committee has at this time. And at this time, I'd like to hear from some of the other people that are speaking toward the bill.
Thank you.